Well, a lot of people have been looking at, of course, Epic Universe opening in less than a month from Universal Studios, but people also have been paying a lot of attention to Disney and how those parks are going to fare when Epic Universe opens. But a lot of people have been very curious about how the previous quarter has gone for Disney leading up to the summer. And in Disney's financial earnings report, we have an answer to that. And I think Disney is pretty happy with the results here. So we're going to go through some of what they talked about in this and how things are shaping up in the parks and the streaming side of things going into this summer. So we're going to go through this and give some thoughts. So hi, I'm Jared with CapTheMagic, and this is from Blog Mickey. And this is Disney Parks Division records revenue of $8.9 billion in quarter two of 2025. The Walt Disney Company has released its second quarter earnings for fiscal year 2025. Like we said, posted revenue of $8.9 billion when it comes to the theme parks, cruise lines, and products. This is with an operating income of $2.5 billion. On the revenue side, that represents a 6% increase versus this time last year. And on the operating income front, Disney Experiences saw a year-over-year bump of 9%. So those are good numbers. Domestically, theme parks recorded $6.5 billion in revenue and $1.8 billion in profit, a 9% and 13% jump respectively. International parks saw a 5% decline in revenue to $1.4 billion and a 23% decline in operating income to just $225 million. Disney had to say that the operating results at our domestic parks and experiences increased compared to the prior year quarter, primarily due to growth at our domestic parks and resorts, and to a lesser extent, Disney Vacation Club and Disney Cruise Line. Says reflecting higher volumes attributable to increases in passenger cruise days, theme park attendance, occupied room nights, and Disney Vacation Club unit sales. Additional passenger cruise days reflected the launch of the Disney Treasure in the first quarter of the current year, an increase in guest spending due to higher spending at our theme parks, and increased costs primarily attributable to the fleet expansion at the Disney Cruise Line. The decrease in operating income at our international parks and experiences was attributable to Shanghai Disney Resort and Hong Kong Disneyland Resort due to lower theme park attendance and increased costs. They also did note that they saw an increase on the income on the consumer end due to some licensing deal they had, which one of them was for Marvel Rivals, which has been a very popular video game. They said they saw an adjusted EPS up from 20% of the prior year, essentially driven by a lot of that game there. So a very strong quarter for Disney, undoubtedly. And I think a lot of it was even surprised by Disney. We got a little bit more info here on Yahoo Finance. And they said that the company raised its full-year profit forecast to $5.75 a share, up 16% from last year. Analysts had expected 2025 adjusted earnings per share to come in at $5.44. The Disney stock jumped over 10% in early trading as investors digested the results. So their stock now is up over $100. So it has taken at this point, it's over 10%. So the investors are liking that result there. They also did announce a new Abu Dhabi park, but I'm going to have a separate video talking about that and what that means. But that is part of one of the reasons I think why the stock has gone up is the announcement of that. They also had a streaming surprise. Disney Plus added 1.4 million subscribers in the quarter, which a beat compared to the 1.25 million subscriber loss analysts polled by Bloomberg had expected. So they expected 1.25 million subscribers to be lost, but they added 1.4 million. Whoever analyzed that was way off. The company reported a drop of 700,000 paying customers in quarter one as a result of expected user churn. It says, amidst of those price increases, along with other initiatives like password sharing crackdowns, the company's direct-to-consumer streaming unit, which includes Disney Plus and Hulu, posted a profit of $336 million, and that's up from the $47 million 1 year ago and also ahead of analyst expectations. Now, that is one thing about this. First off, they're happy with that, of course. I mean, they had not only streaming doing well, but the theme parks doing well. But when you're looking at Disney Plus, they are including Hulu, and Hulu on its own, it has been a very successful streaming platform. You look at like Netflix and Hulu are some of the most established ones. So Disney buying Hulu and wrapping it up into Disney Plus, they're not going to say how much of that was Disney Plus, how much of that was Hulu. But since they have started wrapping up Hulu into basically reporting the streaming side, they have seen profits go up. So I do think a lot of that is due to Hulu and the things that it has there with like the live TV offerings, the people that are already invested in Hulu, and there are some, shows on Hulu that are on Hulu only. So I think a lot of that is Hulu. not as much of it maybe Disney Plus, but they're not going to break down that split. So that is just one of those things where, before they got Hulu, Disney Plus wasn't really reporting profits. I think they showed one quarter where it was up slightly, but not to the extent it has been up since they've been wrapping in Hulu with that. They said overall revenue of $23.62 billion beat expectations of $23.05 billion in the quarter and represented a 7% increase from the prior year period. They also went on to go into a little bit more details about in the theme parks. Obviously, they had a 13% rise in operating income at the domestic parks. They said that Disney also saw an increase in guest spending at the parks, bucking fears of consumer and tourism pullback in the U.S. This was offset by the higher cost needed to expand the cruise line, with 2 more ships set to launch later this year. Disney CFO Hugh Johnston said on the company's earnings call that the attendance at its China parks remains strong, though per capita spending is down as consumers continue to be challenged. Still, he noted overall engagement is healthy. He said consumers are tightening their belts a little bit in this particular market, and that's why you're seeing a flow through there. Disney said it expects to see 6 to 8% operating income growth in its parks segment for fiscal year 2025, with expectations for stronger performance in the latter half of the year. Johnson said the company will most likely deliver at the higher end of that range. Now, that statement's very interesting because obviously there's no way to put it. They had a very good second quarter earnings report on not only the parks and the streaming end, and this is one reason why you're seeing the investors react this way to it. But they're going back to this, which they hadn't gone back to this previously. The previous financial report, they did not mention this 6 to 8% income growth in the parks. They had mentioned it last year. And so Hugh Johnson's going back to this thing. They expect a 6 to 8% operating income growth in its parks in the segment for fiscal year 2025, but he expects in the higher end of that range. So undoubtedly was a very strong quarter for Disney and the theme parks and the streaming side. And obviously they've had, this year in the movies hasn't been the best. The last few movies in 2024, they had, stronger movie side of things. Going into this summer, they got Lilo and Stitch, which is looking very strong. But I think obviously investors are responding very well to this earnings report. And I think whenever you're talking about a lot of the fan base when it comes to the Disney parks, wanting changes in the parks, not liking the direction the parks have been going, when you get an earnings report like this, having the hope that things are going to change or go back to kind of how they were, there's really no motivation in Disney's eyes to really do that. When you're talking about 13% growth in domestic parks, what they're doing is obviously working. Now, whether or not that means the fan base that's been there for 20, 30 years likes that, or some new fan base, or whatever that percentage is, you're not going to see the catalyst for change on that end of things with an earnings report like this. So even though we have started seeing, the luggage service coming back, obviously a lot of discounts this summer, there's been the rumors that, Disney's talking about the Disney bubble and they could look at perhaps bringing back Magical Express. But I think at this point with a quarter like this, in the meantime, before Epic Universe opens and seeing how that affects them, I have a feeling we're not going to see much change outside of maybe some continuation of discounts that they run this year. And obviously, Hugh Johnson, they're back to saying that they expect to see 6 to 8% growth on the theme park side of things for the year. So I think ultimately, though, if you do look at the discounts they're running, how massive some of these discounts are, the amount of discounts they have, they're not loving what they see. They're not liking what they see in their bookings for the hotels and the ticket side of things. So I think undoubtedly that just because a very strong second quarter doesn't translate to, a super strong third quarter, given the fact that the variables change here, and the variable being their biggest competitor has a brand new theme park coming online. So if you didn't have that situation out there, I think that this second quarter earnings report would definitely carry a lot more momentum with it going into the third quarter. But just given between this one and what's coming up in the next earnings report is such a change in the Orlando theme park area, and just brand new, highly immersive, like high-tech theme park coming online that obviously is trying to compete with Disney, that does change the equation. So how that translates to the third quarter earnings report, that will be very, very interesting to see, not only for Disney, but for Universal. Because as of right now with Epic Universe, a lot of this is hype anticipation, but we don't have any hard numbers yet. Even though this park technically is open, it's in preview mode. Anybody can buy tickets to it, but the park doesn't officially open until May 22nd. So once you start seeing the numbers there, how's that look for Universal? How do people that are going to Epic Universe go to Disney, vice versa? Like, all this stuff is really almost, I'm not going to say wiping the slate clean, but you're definitely starting off on a separate foot here in May, June going forward for the rest of the year versus how the year started off, and you got these first and second quarter earnings reports here. So I think Disney obviously have some momentum here, and I still do think that Epic Universe is going to make a hit on Disney's attendance because, again, I think you look at the discounts they're running, like they're obviously wanting to try and stem that tide, or at least chip away at people going to Epic Universe and not liking something they're seeing. So I know whether or not it's a huge impact or a small impact. Hugh Johnson himself said that they expected a slight impact in previous earnings reports from Epic Universe, so they're even in somewhat not even contending that Epic Universe could hit them. But I suppose that a lot of it is how that park is received. Do they work out the kinks with it? It does have smooth operations. Like if the first word of mouth about Epic Universe is the fact that this park still has a lot of issues, operational things going on, you could see a lot of people holding off on going to the park. Not that they're not interested in going, but they may just be waiting until they see this park really start, delivering and being consistent for guests. But if they are able to get these things running very smooth, let's say by June, July, August, you could see a lot of people start booking trips for the fourth quarter or early into next year going into Epic Universe. So it's not necessarily just the opening period here for Epic Universe and Universal, but it's also just the upcoming and ongoing months going forward and seeing what this overall park's impact is. And we probably won't have a really good idea about that until we really almost get a full year of just what it looks like once the park is running well, when it seems like these rides don't have reliability issues. Again, with a brand new theme park, that's not unexpected, but how does that impact things? I think a lot of that is going to be very telling, and we're going to find out about it through the earnings report from both Disney and Universal and Comcast. So we will know relatively soon, and then the actual attendance numbers usually come out a year delayed in the T report. So we won't know those numbers until about June or July of 2026. So the actual attendance numbers we may not know, but we'll get the revenue and the overall attendance figures in terms of percentages, whether it's up or down in the earnings reports here. So entering into a very exciting period when it comes to theme parks here. Financial reports aren't fun to watch or listen to, but obviously Disney's very excited about this one. And we'll have to see if this momentum carries forward or if Epic Universe ends up being something that really stops that momentum and changes the equation when it comes to theme park attendance in Orlando. But either way, that's going to be it, though, for this video. If you like this video, please like it and subscribe to the channel. As we do, let's coverage here of Universal Studios, Epic Universe, Disney World, and pop culture. And let us know in the comments, what do you think about this earnings report, and how do you think this shakes out the rest of the summer once Epic Universe comes online? And until next time, we will see you in the parks.